Now, despite a subscription rate of 338 billion naira, the Central Bank of Nigeria sold 40 billion naira in Thursday's OMO auction. Traders at Axis Bank say they expect bearish sentiment to persist. Dimeji Obasa, fixed income dealer at Axis Bank, joins me for a wrap on market activities this week. Dimeji, thank you for taking the time out to join us today. Let's get right to it. But let's start with today's market action so far. Take us through what you've seen so far from the treasuries, the bond market, and of course the FX segment.
Thank you very much for having me. What we've seen in the last 1 week has been more of demand for securities amid the significant increase in market liquidity that we've seen from the FAC inflows that came into the system. So what we've seen is market participants trying to utilize those funds by investing them in treasury bills and bonds, particularly on the short end of the curve. Like you said, the CBN had an OMO auction yesterday, wherein they sold only about 40 billion, which was what was on offer, despite the significantly higher subscription from market participants. So what we've seen today is market participants still trying to utilize the excess funds in the system. We've seen demand, particularly on the short end of the bond curve, as well as along the curve on treasury bills.
Now, for the treasury bills, where's the 1-year note trading at now? I know it went up as high as 6%, but there was a bit of a pullback. Where are we now?
So we are still trading around the 6% handle, slightly lower because of the demand that we've seen over the past 1 week, but still around the 6% handle.
All right. So what can we, the last 2 weeks, so it's been an issue of liquidity, which is what essentially has been what is driving the market, and not just the low, high inflation environment or negative real return environment for investors. So, how do investors, this is a new month, what's the play for this month? Is it going to be the status quo? Are we still determined by the level of liquidity at the market? Talk to us about mop-up activities we're expecting, and if there'll be any new reopenings at the bond market.
Yeah, so the general sentiment is for an increase in rates, and this was seen in the last treasury bill auction, where the 1-year closed significantly higher. So market participants do expect rates across the treasury bill and bond curve to increase. But in the meantime, you can say over the short term, possibly, they still have to utilize the cash that they have. So that has spurred demand, and with the demand, we are seeing pullback in rates. But the general consensus is for an increase in rates along the curve on the treasury bill side, as well as the bond curve.
And when you say, of course, general sentiment is an increase in rates, at what point, how much resistance can investors put up against, what the government is willing to put on the table in terms of the interest rate? I know that obviously now we're at a time where investors are demanding more to hold on to government securities, but on the other side, on the government side, how much power do investors have at this time?
So that's where the markets will just sort of find its level. You're correct, the market does expect an increase in rates. Like you've noted, we currently are in a negative yield environment, which has been the case for the better part of the last 1 year, right? So investors do want higher yields. However, it comes at a significantly higher cost to the government. So the market will sort of find its level slightly higher, which is our expectation. But then the government will definitely try as much as possible to manage supply so as not to, move the rates too high.